Hey everyone, my name's Andy. My channel is Finding Value. If you haven't subscribed yet, please subscribe if you like making money, and click the thumbs up button if you like this content. I'm going to go over fundamental analysis and a little bit of technical analysis. And I'm going to give you my opinion on these analysis and kind of some things that I look for in a company. And it's probably very different than other people. So I'll jump in here and describe what I look for in some of these things. So one thing I want to make clear, so fundamental analysis, you analyze a company and you figure out that the company has great fundamentals. It's cheap, it makes money, and it looks like it could grow quite substantially. But the stock doesn't move for many years. You put money in it and you're in it for 4 or 5 years and it doesn't go anywhere. How come the stock isn't moving? It's great fundamentally. What the heck is going on? So you've done your analysis. The stock doesn't move because the sector is dead. The market conditions are not ripe for the sector yet. The market doesn't agree with your fundamental analysis. The market ultimately determines the value of your investments. You don't. Fundamental analysis without market conditions will put you in a world of hurt because the company may still be driven down if it's a commodity company and the commodity price goes down. You could have great fundamentals and still be in a world of hurt. Now, technical analysis, I'm just going to give you an example, to compare these two, I should say. Technical analysis is great for timing purchases. You don't even need to do the fundamental analysis at all, and some people don't. That's not what I'm recommending. I'm just letting you know that some people don't do it at all. You can see what the market thinks of these stocks through the charts and also get your timing. Technical analysis won't help you with market conditions per se, though. And you still need to tie everything together if you want to invest for the long term. You still need to understand the market conditions, the underlying market conditions behind these investments. Technical analysis will get you so far, but it won't let you be someone who holds onto their shares that tight. You won't be able to know if it's a market correction in a big secular bull market, or if it's some timing that you got to sell out right then and there. So in my opinion, tying it together, the fundamental and the technical, is absolutely necessary. If you get the market conditions correct, real estate, interest rates, inflation, sector valuations, if you get that right, you will become a successful investor. You need to use technical analysis to time your entries and also to evaluate all of those other areas. You have to see and monitor them real time. And I don't think you can do that just off of fundamental analysis. You have to have technical analysis tied into fundamentals. And I also think that you can be just an okay fundamental analysis investor. You don't have to be great. An okay company in great conditions can do great things. So how I look at companies, how I value companies. When you have a sector like uranium, in my opinion, you want to spread your money amongst those who can be possible winners, just possible winners. I look for companies who have good assets and who can produce into this uranium bull market. Proven management teams are great. That's something I look for. Easy to mine assets. I don't want something that they have to develop technological wise to get the stuff out. I want it to be ready to go. A market cap is something I look at. It's the ability to grow and how easy it is to grow. A market cap going from 10 million to 20 million it's pretty easy. Now, a market cap from 5 billion to 10 billion is much harder to grow. You're going to have a lot of assets, and you're going to have to really push the envelope to get it that big. Gems are found in companies that people aren't willing to invest in. You're going to have to look at things from a different angle than everyone else. If everyone says this company's not good because it has a lot of shares, or this company's not good because they need to raise more money for their project to work, you're going to have to do more research into the company to see if those claims are true. And even if those claims are true, I'd like to hear it from the CEO of the company on what their plan is to raise that money. You might be surprised that what everyone is parroting to everyone else may not be 100% true. I also look at what am I paying, what's the market cap, and what's the dollar per pound in the ground. So if they've got a 10 million market cap and 200 pounds in the ground, it's an easy to extract resource. They have a good CEO, but all they need is to raise some money for the project. Maybe that's one that you put some money into. That's a Bannerman. Maybe you look at something else where they've been raising money through share dilutions to fund the project, and that project's getting very close, and you don't think they're going to have to raise any more money through share dilution. Maybe that one's one to go into because everyone's scared from all the previous share dilutions. Maybe you get caught in a share, with them diluting your shares. That's possible. Now, there's something else I want to go over. Why do I spread my money amongst a bunch of these companies? Why don't I just go after the easiest bets with the strongest balance sheets in the portfolio? Why don't I just stick with known good companies and just put my money in those? So here's one thing I want to make sure is clear. Known good companies carry a premium value on them. You are paying a premium for them. And what I have below is, what if the great company returns a 40x, right? It's $1,000 turns into 40,000 bucks. Now, what if there's 1,000 bagger out there? Just hypothetically speaking, there's 1,000 bagger that you could get. You put $1,000 in the 1,000 bagger, and it returns $1 million of your 1,000. Now, if you had just caught one of those, you caught one of them, you turned $1,000 into $1 million. If you put all your money in the 40x, you won't even be close to the return that you had got putting $1,000 into the 1,000 bagger. If you put 1,000 into the 40x and you put 1,000 into a 1,000 bagger, the 40,000 is only 4% of the value of the $1 million that you would have made on the one. Even on the 500x, if you get a 500 bagger, and I'm not saying this is easy, guys. This is going to be an ultra rare thing. I'm just saying if you catch one of them, you caught $1,000 in a 500 bagger, you get $500,000 return. The 40,000 on 500,000 is only 8%. It's only 8%. So I think that it's good. A known good company is not going to be the highest returning company. You're going to have to go after a risky one if you want the outsized return. Now, I'm not telling you guys to go into a bunch of risky companies. What I'm trying to do is let you understand that the company that everyone is doubting right now and doesn't put their money into, one of those companies is going to be the one that returns the most. I don't know which one it is. My betting strategy is to put a little bit in everything just to ensure, even if it's $500 even if it's a little bit of money. 500 times 1,000 is still $500,000. If you spread it out amongst all the possible bets, you got a little bit in each, and one of them hits, you captured that value, you captured that hidden gem, even though you might not have known that was going to be the hidden gem. That's all. That's why I'm spreading the money amongst a bunch. And if someone says that company's bad, that company's dilute shares, doesn't have money, yada, 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 I'm probably still going to go into it if they have a good asset that could be producible within the bull market coming up. That's just my take. Because if that is the 1,000 bagger, if that is the 500x, if that is, one of these high returners, at least I captured it. So the betting strategy here is I bet in a way that includes everything, but at different quantities. I'm not dumping all my money in a high risk one per se. Higher risk bets with okay management gets less money, less of my money. I might trade in and out of some of these companies, letting profits ride only. Perhaps that's a strategy. I park more money with the better management teams. Keep that in mind. I'm not putting all of my money in these high risk bets. You know, the higher risk companies in this sector. Companies with less cash get less of my money. And again, I want to spread the money out and capture the move with the most amount of companies, because if one of these hits with a very large return, I captured that valuation. I captured the value on the upside. So the conclusion here is this strategy is just how I view things. This is me. Uranium will probably be one of the highest returning sectors in the next bull market. Again, that's my opinion. Very few companies exist in this sector in relationship to a whole bunch of other sectors. So I think it's not difficult to put a little bit of money in a lot of these companies and have one of them absolutely tear it up. My fundamental analysis doesn't match those of others. So keep that in mind as well. I don't really dig down. I mean, I dig down in some of them, but I don't do net present value calculations. I don't have to do that because things are going to look so bad on the downside that I don't know if it's, I have to value it differently because I'm a bull on the commodity. I think commodities are going to go, you know, uranium especially is going to go much higher. If that happens, I'm looking at companies to say, well, what is their valuations going to be at a higher price? That's what I'm looking at. And I'm looking at if other people are avoiding the company, I'm going to go after it. I'm going to put some money into it. And again, I rely more on technical analysis at times versus other times. And right now, I'm relying more on technical analysis than I am on the fundamentals of some of these companies, because I know that the conditions are going to change in this market, and they're probably going to change rapidly. What does a Goviax or a Bannerman or some of these other companies that people aren't buying, a Standard Uranium, a Sky Harbor, what are those valuations if uranium's at $80 or $100 a pound? What if we get an $80 or $100 per pound 2 years from now? What does Bannerman look like? What if a bunch of people come to the plate and say, hey, look, we need uranium, and I am going to get contracts in place with you guys 3, 4, 5 years out from now. Maybe that's their ability to develop that project that they have. Maybe they can get financing now that someone's interested in it. Maybe they do a financing thing with the user or consumer of that uranium. There's a whole bunch of different things out there. And I am open to all possibilities. I am not closing down something because they don't have money per se. The opportunities are so large coming in front of us that I want a little bit in everything. Because if one of those guys hits, I mean, if I've got $1,000 or $2,000, if I got a little bit of money in one of these companies and they do a million, you know, they do 1,000-fold, and they turn my $1,000 into $1 million, dude, that is completely worth the risk. And what if I can do a $2,000 or $3,000 investment? Technically, I ride it up. I get 50% of that or 100% return in a short period. I yank my money back out and I let the $1,000, $2,000 that's back in profits ride. That's a good strategy. It's a risk-free ride. So, you know, look at my risk-free ride, look at some of the technical analysis stuff, look at some of my videos that tell you and show you kind of my strategies of what I deploy sometimes. And usually I do a free ride on a company that is higher risk. I don't do them. I usually let money sit in some of these where the technicals still look good, and I think fundamentally they're still strong. So I don't trade in and out of those. Those are typically only the higher risk stuff that I do free rides on. And in this uranium bull market, the returns can be so big. I gotta capture everything I can. So if you like this content, click the thumbs up button. Subscribe if you guys like making money. This is the channel for you. Our community on this channel is very good. It's very strong. Leave comments if you guys want to leave comments, ask questions. A lot of us, even on this channel in general, can answer those questions for you. Thank you for listening. This is Finding Value.